Yo, the world's largest Bitcoin index fund just exposed why 2.8 million Bitcoin will be bought before the end of 2025. Also, what's really crazy is that there's only 165,000 Bitcoin yet to be mined this year. So you guys just do a little bit of quick math in your head. All this demand, $2.8 million in 2.8 million Bitcoin wanting to be bought, but there's only 165,000 Bitcoin yet to be mined this year. I mean, it's easy math. So who are these new whales, and when will this supply shock finally trigger this infamous or this famous, depending on how you look at it, the Omega candle that has been coined by, of course, the one and only Samson Mao. Anyways, we have some clips prepared for you guys from who's the person on the clip?
It's Matt Hogan from Bitwise.
Matt Hogan from Bitwise, and he's covering all these topics. It's quite interesting. And also, we have a special guest and a friend of the show. We have Mauricio, the co-founder of LEDN. We're going to be talking about all things Bitcoin loans during the culture segment. So you guys are going to want to stay tuned. Let's check out the clip, and then we shall talk about it.
If you look at the supply-demand characteristics of Bitcoin right now, I hate to be really simple, but the amount of new Bitcoin being produced next year is 164,250. And we think ETFs will buy 500,000, corporations will buy 350,000, and governments will buy somewhere between 0 and 2 million Bitcoin. So far, on a year-to-date basis, through March 6th, this is what's happened. There's been 57,000 new Bitcoin produced. ETFs have bought all of it, and then corporations have bought another 3x. And I think governments have bought about 40,000 Bitcoin as well.
So clearly there's not enough Bitcoin to go around, which is, I mean, we've been saying that for many, many years now. But someone in the crowd was impatient, like I am. And I was like, okay, fine. You know, we're seeing all these numbers. We're seeing all this demand. We're seeing all these people, these ETF, all these institutions, all these countries. You know, they all want to buy Bitcoin. But like, when number go up? When are we going to get this Omega candle? Someone in the crowd actually asked him that question. Check out what he had to say.
Given all the demand you just outlined for Bitcoin that you see, and then your target for end of year,
yeah.
What do you think is most likely in terms of the way it gets there, right? Are we going to see these Omega candles where Bitcoin goes from 100 to 125 overnight?
Yes.
Or what do you think about that?
Yeah, I think that's exactly right. I think they're air gaps because I do think the selling is behaviorally driven. I think that's the only rational explanation for why it's essentially treaded sideways and then ripped and treaded sideways, 72K and 100K. So I think it's behaviorally driven. What that means to me is once it releases its tether, which is an unfortunate word in crypto, once it releases its connection to 100K and it gets above that gravity, I do think it probably rips up to like 125K. So I think it's going to be a punctuated equilibrium of fast moves and sideways movements as it sort of burns through these behavioral reserves. Yeah, I guess that's my answer.
That's right. So again, kind of laying out the case, like, you know, he's making the case that, you know, there's not enough Bitcoin to go around. There's almost 3 million Bitcoin that institutions want to buy. There's only 165,000 Bitcoin left to be mined this year, right? You can't change that number. In fact, the halving makes sure that that number gets halved every 4 years or so. And, you know, someone in the crowd couldn't contain himself. Like, I felt like I was in that crowd. I felt like, you know, that person was embodying the Nico spirit. It was there. And I was like, okay, man, with all these crazy numbers, like, when Omega candle? And, you know, Matt Hogan, the chatty id, he's like, oh yeah, we're getting an Omega candle. We're going straight from 100K to 125K. Now, I want to pass it on to Mauricio. Mauricio, do you agree with him? Do you think it's like these kind of psychological barriers that, you know, like really kind of make up these Bitcoin price points? Because we've been kind of fluctuating around the 100K region. Do you really believe it's all psychological? Like, do you really believe it's just the sticker price that, you know, goes into kind of the psychology behind a lot of these Bitcoin price milestones?
Yes. Thanks, guys. Lovely to be here as always. And I actually have been waiting for an opportunity to take this one out. But hey, you want an Omega candle? I have an Omega candle. It's right here. Thank you. Thank you, Jan 3 or Jan 3rd. So I would have to say I agree with Matt's assessment as to why we are trading in the way that we are trading. First of all, I will say that Bitcoin hanging in over 100K as the world is literally on fire is a huge testament to the staying power of this asset class. I think all of us should be in awe at how Bitcoin has handled the most recent wave of geopolitical conflict. And I think it shows that Bitcoin is doing what it's supposed to be doing. So if people in places like Iran, Israel, all these people right now are gravitating to Bitcoin and stablecoins because it's the only thing that works for them right now. And you're seeing time and again Bitcoin function as it should in the places where it should. So I think this is hugely positive for Bitcoin to see the price action we're seeing today. In the context of geopolitical issues we're seeing. Now, in the context of all this buying demand that we've seen announced by ETPs, ETFs, Bitcoin acquisition vehicles, governments, and why is Bitcoin not, ripping through 100K? I think a couple of things that are important to consider is that, number one, this new type of buyer is a professional buyer. These people are professional investors, whether that is a corporate, people jumping into the ETFs, or governments. We are now in a very different realm of buyers versus the guy that found out Bitcoin at their barber shop or through speaking to a friend at a meetup and then went and bought some. The people that are buying Bitcoin right now are in the spotlight, so they're under scrutiny for these transactions and these positions, right? If you're an acquisition vehicle or a publicly traded company, you're at the mercy of your shareholders. So you want to show your shareholders that you're buying Bitcoin at good, fair prices, and you're doing a good job at sort of tracking that. Nobody wants to be the Bitcoin acquisition vehicle that was known for market buying the top, and then a war happened and they basically had a negative mark to market on that position. So what I expect that we will see or continue to see is that a lot of these funds that have been raised by these acquisition vehicles have not been directly deployed into the market today. I think a big reason for this is that Bitcoin has been hovering very close to its all-time highs, as Matt mentioned, around this 100 to 110 mark. It hasn't really gone down below 100. And what I think we're going to see is the drops in Bitcoin price, or the dips, are going to keep getting absorbed faster and faster because these professional buyers will see any good opportunity to start putting on that position. And whenever they are seeing it get close to 100 or under 100, that's where they want to start buying, so that when Bitcoin goes to 125, they come out and they say to the market, look, we're up, right? We weren't the guys that bought at 125 and then it stayed there or grinded down back to 100. So I think a lot of this is the person or the new sort of war chests that have been built to buy Bitcoin aren't going to be deployed on market buy orders that are going to rip Bitcoin from 1 to 125. Nobody wants to be that treasury company that comes out and says, we bought the absolute top. Michael Saylor can get away with that because he has an average cost that's much lower. He started buying at 20K. So he still looks like a hero. But if you're an acquisition company that's coming out and your first 3 buys were over 100, 110, you literally bought the top, and Bitcoin didn't do anything in 6 months, all of a sudden your shareholders are asking questions in Q4. And so I think that that's going to change the price dynamic that we've been used to for the last couple of years. And I think you're going to see a lot less downside volatility for Bitcoin. I think the upside volatility for Bitcoin is largely going to come from most likely from some sort of short squeeze event, whether that is someone like Chanos, trying to short MicroStrategy and go long Bitcoin, and then they have to essentially unwind that position or take a short on Bitcoin to go long the futures, or some type of pairs trade that basically doesn't work out. And then when you're covering that short, you're market buying that Bitcoin, which is what takes us eventually higher. So market sells or market buy orders is what drives the book higher. A lot of these new acquisition vehicles are not doing market buy orders. They're doing limit buy orders, and they're doing these in a way that the market almost has a very hard time figuring out that they're buying, because nobody, if they know, or if the market knows a big buy is coming, they'll try to front run it. And so these types of new buyers are very, very sophisticated, and that's going to lead to a very different price action. And I think, people talk about max pain. What's max pain? I think max pain is actually Bitcoin grinding slowly higher, just churning slowly higher from here till the end of the year to get to this sort of 125, 130 without rips to the up or to the downside like we've been used to. I'll pause there.
Yeah, and it makes perfect sense too, Mauricio. And by the way, it reminds me of something that
Yeah, I was gonna say the same thing. Have you seen this, Mauricio?
I saw it. I didn't pay too much attention to it, but the sort of grind higher meme or this grind higher narrative is something that I've sort of discussed in private with a lot of other smart people, and they seem to have similar views to me. So I'm not surprised to see this.
Yeah, and people call it or Brad Mills calls it specifically. He calls it the sailor cycle, and essentially, it's exactly what you said, exactly word for word what you said, right? Limited kind of downward volatility, but the upside is still there. But it's kind of like this, this choppy line up and to the right, but like more choppy instead of those like kind of catastrophic, meltdowns that we've had in previous cycles. And your theory of the case for this, Mauricio, is that the chasm has been crossed. The ETFs changed the game. The Bitcoin treasury companies changed the game. Wall Street entering the scene has changed the game fundamentally for Bitcoin. This is no longer retail driven. By the way, this is data driven as well too. If you go look at Google Trends, we still haven't surpassed. Oh, we're on the front page of Rumble. So shout out to the Rumble. Shout out to Rumble. Smash the like button if you guys are enjoying the show. Yeah, so this is what you're making the case for is essentially that, the days of this being kind of like this speculative retail driven bubble are over, and Bitcoin has basically grown up now.
Yes, and it's not so much Bitcoin's grown up, the buyer of Bitcoin has grown up. The guy holding Bitcoin in their portfolio has grown up. It's not just me, you, and Opti. It's now governments. It's now Tesla. It's now giant corporations. It's now MicroStrategy. It's Paul Tudor Jones. It's Tim Cook, right? It's these people have they're at very different points of their lives. They, a lot of these investors aren't going to be put in a crunch if Bitcoin's down 10%. A lot of these guys aren't taking excessive leverage. And when they're doing leverage, they're using it very responsibly. So they're far, far away from a potential liquidation event. So what used to take us into these massive up and down moves was, number one, we used to get these like wave of buyers every time there was a big announcement. So remember when Tesla first announced they were buying Bitcoin, and when Michael first announced that he had bought some Bitcoin, you had this massive wave of new buyers, and the order books on the sellers were very thin. So that would drive us higher. And there would typically be people who were short Bitcoin for speculative reasons or whatever. And these shorts were the guys that basically having to cover those positions getting liquidated on the way up would drive us higher. So there was a lot of leverage on both sides of the house, and the order books were so thin that the amount of leverage relative to the capacity of the order books used to run up the book on the way up from shorts getting liquidated. And when people accumulated a lot of leverage on the way up, a down price move would be the spark that would trigger another massive wave of liquidations on the way down, because speculators, again, were over leveraged and there was just not enough bid on the book to hold the price. Right now, the books are much beefier. A Bitcoin book right now can probably offer billions of dollars in buying demand until we hit 100K. And similarly, on the sell side, you'll be able to sell billions of dollars and sort of keep Bitcoin or buy billions of dollars and keep Bitcoin contained within 110K. This wasn't the case before. So I would say the depth of the buyers and the sellers has gotten bigger. The amount of leverage actually hasn't materially gone up. If you look at the leverage levels that we had in 2021 and until today, we're still at around half of the leverage. And mind you, the Galaxy report doesn't encompass all types of leverage by way of options or leverage ETFs and things like that. There's pockets of leverage that don't come up in this report. But I would argue that broadly speaking, the levels of leverage we're seeing today are still far below what there was in the market in 2021. And not only that, but the leverage that is in the system is being used a lot more responsibly than it was in the past. I'll give you an interesting data point. We saw already this year 30 plus downward moves from 100 and some K down to 70K. At LEDN, less than half of 1% of our book was impacted by liquidations. Mathematically speaking, a lot of people would have been impacted if they were using leverage by a 30% down move. But in our case, people plan and know how to act. They understand these products a lot better. And nobody wants to get liquidated when they come to LEDN. We don't want to liquidate anyone at all, but it has to happen because these are the protections we have for a Bitcoin secured loan. That said, people understand this and they are planning better as they're coming into the position because they know if the market goes down, they'll have to add more Bitcoin, and they have a trigger ready, and they're topping up their loans and they're not getting liquidated. So no liquidations means less pressure down on the order books, which I think is, again, why we're going to see this volatility compress over time. And by the way, even if you want to go back to sort of textbook economics, this is what Bitcoin should be doing. Bitcoin's volatility long-term should be much closer to gold. When was the last time you had anyone talking about how volatile gold is? You know, gold is boring. And eventually Bitcoin's volatility should be something that none of us really have to think about that much. It should be in the background. Nobody's really, worried about the volatility of gold today. And I think that will be true for Bitcoin too.
And I see someone in the comments like, do you like, is Bitcoin boring? Is it over, or do we still have another 5 to 10 years of potential upside volatility? Because I think that was some of the concerns in the chat.
Boring is good, especially when you're talking about your savings, right? Like if you have your wealth in an asset, wouldn't you want the value of your wealth to be somewhat predictable and less volatile? This is why people love gold, right? And I don't think that, listen, just to make it abundantly clear, being boring doesn't mean we're going to stop going higher. Okay. Like the reason Bitcoin continues to go higher is because it monetizes the debasement and inefficiency of government spending. That's not changing anytime soon. Okay. We're going to continue accruing value at the pace that these people are printing currency and mismanaging their economies. That's a very, I would argue plus minus 10 to 15 to 20%, depending on what part of the world you're in. And whether we get there in sort of a straight, 1% per month to get to 12% combined, or we do 25% up, 10% down, another 30% up, and we wound up at the same place. For investors, it's actually a lot better if that can be more predictable, because it allows you to do more long-term planning. Imagine if I was able to offer you a longer term on your Bitcoin-backed loan, or more sort of visibility if you wanted to have a hedge position 2 or 3 years out. Like that starts building this yield curve, or this maturity curve around Bitcoin financial products and Bitcoin finance, that allows us to start using Bitcoin for more and more long-term planning things. My loans are termed out for a year, so my rate's fixed for a year. If I was able to fix a rate for a client for 5 years or 3 years, that person would have a lot more visibility into their cash flows and may be able to use that Bitcoin as collateral for a longer term project without having to worry about the risk of that interest rate changing. So less volatility means more ability and more visibility to long-term planning. We are time preference people. We should all welcome that.
Absolutely. I think that's a really good point. I think you're describing exactly what's happening in the markets today. Bitcoin has grown up. Bitcoin is an established player. Bitcoin is being treated seriously by governments, by institutions, by Wall Street. And you're making the case, Mauricio, that that is a good thing. That allows more serious players to come in. That allows you as a business owner to offer more products regarding lending. And what I will say is, even though the volatility might be lower, fundamentally, if we take a look at Saylor's prediction, right, you're still looking at a 30% CAGR for the next 20 years, right? So, I mean, that is absolutely, absurd, right? And compound interest is that's like literally how Warren Buffett got so wealthy, right? Is, compound interest, right? So, imagine compounding 30% year over year for the next 10 years. I don't know what the math is on that. I don't know, Opti, if you want to pull that up, but that's still an incredible investment in my opinion.
Yeah, and I think there's perhaps a misconception, because I think we're conflating two concepts. We're conflating the accrual or the sort of appreciation of Bitcoin, and Bitcoin can appreciate. There can be two things can be true. Bitcoin can appreciate at 30% year over year, and Bitcoin's volatility is down. Those two things can be true at once, because it's not necessarily how high you go, is what is the process or the walking path through which you get to that 30% return over the years. It like I said, you can have an asset that goes up, let's just say, just to keep the numbers easy, if your asset an asset can go up 24% over the course of a year, and it can do so by doing 2% each month. Boom, 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 predictably. So then you go and you're up 24%. You can also get to 24% up if you go up 50, down 50, up 50, down 50, up 50, down 50, and then the last month you go up 24. And so the second path would have much more volatility, right? They will both get you to the same endpoint, but one path would have a lot more volatility than the other. And I would argue that volatility is a function of the depth of buying demand, selling demand, the size of the asset itself, and the sort of financial instruments that are available to hedge that volatility. As Bitcoin becomes bigger as an asset, it takes more money to move the asset in price, right? It takes bigger sell orders to move it down. It takes bigger buy orders to bring it higher. And so as the asset becomes bigger, the flows you need to cause a dent on the price become much bigger. So that in itself acts as a massive shield. Then we have options markets that are out around the ETFs, where people can sell volatility and buy volatility. What that does is it tends to compress the realized volatility in the spot markets. So Bitcoin, to me, is doing exactly what it should be doing, right? My evolution of Bitcoin was, it would trade first like a tech stock. It would trek probably something close to NVIDIA at the beginning. Then it would start moving closer to like a tech index, something like a NASDAQ. Then it would move slightly less beta or more boring. So it would move a little more like the S&P 500. And eventually at this end state, it should trade a lot like gold. And I think we're walking that path almost textbook.
Yeah, absolutely. And I do want to give a shout out to the live stream. 1,700 live viewers across YouTube and X. And I want to give a shout out to the Rumble stream coming in hot. 300 people watching live on Rumble, and the numbers just keep going up. If you guys are enjoying Simply Bitcoin Live, make sure to smash that like button. We got Mauricio, the co-founder of LEDN, the best Bitcoin lending platform in the world. I might be a little bit biased here. Maybe it's that Venezuelan connection, but no monthly payments, baby. So we're going to be talking about that during the culture segment. Anyways, I had Opti look up the monthly CAGR of essentially what this would be, just to, because guys, like Bitcoin is maturing. Okay. This crazy upside, the crazy, crazy volatility, whatever. But still, I mean, the opportunity is ridiculous. So this is just using Michael Saylor's base case, right? So you have a 30% CAGR for 20 years. Your initial, if you invest $100,000, you end up with how much?
I believe this says 22 million. Hold on. 1, 2, 3, 1, 2, 3. Yeah, 22 million.
$22 million for $100,000 investment in 20 years. I mean, that's crazy. That would put you in the ultra high net worth category. That's not too shabby, right? So yeah, I mean, guys, there's still tremendous amount of opportunity here. But you have to take what Mauricio was saying, got kind of like this low time preference type of outlook. And it's still extremely exciting times. I still think the end of this year is going to be very exciting. We have some videos from what did you pull up?
Not just a comment. I was more responding to the fact that Nico's been bearish this whole time, and I've been consistent on the idea that this end of the year is going to be good, and now he's just stealing my meme.
Okay, so hold on.
No, wait. Before you go on, Nico, there is one thing I do want to mention about that clip that I found pretty interesting. Obviously, speculating about who's going to buy Bitcoin, but the one thing he kind of slipped in at the end is he's like, I think nation states have bought 40,000 Bitcoin. Obviously, I don't know what his data is, where he's looking at that, but that I think would fundamentally change the game right now for all of the narratives and news around. Obviously, we've been talking about the U.S. getting into Bitcoin, strategic Bitcoin reserve, everyone around. We've been talking about where is the audit, bro? Where is the U.S. Bitcoin that we supposedly hold? It would be interesting to see if he had some data or maybe some inside baseball on that, or if that's also a speculation. Of course, this whole thing was kind of speculations. But Mauricio, there have actually been a couple of good comments in the chat saying a similar thing, and maybe you have some more, insider view of what's going on. So everyone was wondering, where are these corporations and ETFs getting this Bitcoin? Is this simply from OTC desks? They're obviously not buying from the open markets. You have any idea on this? Because I would say it's OTC desk, but I'm guessing there's other ways to make this happen.
Yeah, so typically when these corporations are making a transaction of this size, they don't log into Coinbase or whatever and open an account and place the trade, right? They use what's called prime brokers, and prime brokers are groups that are designed to be. So, for example, like if an individual wants to buy $1 million worth of Bitcoin, you can go to whatever exchange, Kraken, whatever it is that you're most comfortable with, River, whatever, and you just place your order and you'll buy it. And there's no real concern that you will move the market or that anyone's going to try to front run your order such that you get a higher price. And what I mean by front running an order, by the way, is let's just say, for argument's sake, that all of us here, or people hearing this, learned that on June 22nd at 3 p.m., the government of X country is going to buy $10 billion worth of Bitcoin. What do you think that would do to the market? Right? Everybody would be buying Bitcoin today thinking, okay, these guys are going to buy. I'm going to buy today and I'm going to sell this Bitcoin to them at a higher price because there's just not that many Bitcoin out there. And if you try to buy it all at once, it's going to drive the price higher and I'm going to make a buck. And so when you do that, that's considered front running. So when a person is looking to make a large transaction that could move the market, they, one, need to be pretty secretive about it if they don't want to put that signal out into the market and allow other players to sort of position themselves to benefit from that upcoming order, whether that's a buy or a sell. So what you do is you end up going to these prime brokers. And what these prime brokers do is they have interconnectivity to a plethora of exchanges that have deep liquidity. They also have deals with private flow. So these could be miners that have a projected income of Bitcoin that they need to sell every month, and they don't want to also go and sell that in the open market for similar reasons. So they will sit there and they will say, okay, if you want to buy $10 billion, I think the best way to do that without moving the market is we plan that purchase across 2-3 weeks. We will buy within these bands, and we'll work to try to get you an overall closing price of X, right? And so you try to do this without leaving any trails in the market that you're out buying massive amounts of Bitcoin, because you don't want people to do that. So you won't be placing a big market order at this exchange. You'll be placing a little order here, a little order there. You take off a big block from a miner. You'll continue scooping them up from individual investors. You might want to do that privately so it never hits the order books. So they have many, many ways of doing this that aren't necessarily reflected in the order book. And by the way, by design, these transactions are not supposed to move the price in the market by design. If you went out and you gave your order to a prime broker to buy $10 billion and the next day you woke up and the market was 20% higher and you got a fill at the top of the market, you'll never go back to that prime broker. So that's just a little bit of the dynamics of how these purchases are made. And I think a lot of that feeds into the price action we're seeing today.
It's completely fascinating, and Mauricio, appreciate you explaining that using your experience. Just like it's such a different type of behavior compared to retail. The retail is kind of like this mania. You get in an Uber, they're talking to you about it. And it just it ends up in this parabolic wave. But what you're seeing is this strategic purchasing. I remember hearing Michael Saylor on podcasts, like, and he would say, like, look, like, I would make sure to just buy a little bit every day just to make sure that people would have no idea what's happening, the purchases that are happening in the background. But as you mentioned earlier, you buried the lead there earlier, and I want to go back to it. You said eventually there is going to be some type of catalyst. Eventually there is going to be some type of supply shock where these prime brokers are going to say, listen, guys, I just don't have any more Bitcoin to sell to you guys. And then, rocket ship, get on board.
No, well, and that's typically what happens, right? Like, I'll give you an example, right? These professional buyers, right? Like, when are Bitcoin books the thinnest? Over the weekends. Okay, that's no surprise. Everybody here knows that all these crazy moves typically happen at 4 p.m. on a Friday. Everybody that's been in this space has kind of witnessed a sort of omega candle or a death candle sometime on a Sunday or sometime on a Saturday. And that is typically because sometimes, the universe or the stars align in that you'll have a person that needs to make a transaction that doesn't have the luxury of being able to wait. They need to do it. It's sort of a forced liquidation or some type of event that they don't have a lot of control over. And you end up dumping this massive order either on the buy side or the sell side into very thin order books over the weekend. And what happens after is price just sort of skims higher because there was just not enough depth in the book on the way up or on the way down, and skims lower. And we open up a Monday or we open up a Tuesday where the professional traders are back on their desk, and then you see a sort of reversion to the mean. So like, if I haven't gone up over the weekend, it comes back down. If it got down over the weekend, it comes back up. But that's because you have professional traders back on their desks on Monday, and the volumes traded on Bitcoin in every market typically are highest during US trading hours. So what you will see likely, and again, this could come from any combination of factors or people or things, right? Like, I see a world where, for example, Bitcoin continues to trade sideways, and some speculators and some retail speculators start taking short positions on Bitcoin for whatever reason, right? They want to be short Bitcoin, long an acquisition company, or short Bitcoin, some other type of pairs trade, right? Eventually, when those dislocations break, I think the first people that are going to need to run for cover are the people that have that short Bitcoin leg. And why I bring up these shorts is because shorts can get liquidated in the same way longs can. So in the same manner that when you buy Bitcoin with leverage and the price goes down, you risk liquidation. When you short Bitcoin and the price goes up, you risk liquidation. Why are liquidations so relevant to price moves, both on the upside and on the downside? Because liquidations are forced market orders. So a liquidation is a market buy or a market sell order to cover a position that a trader had taken and didn't work out. Okay. And so when you're market orders are the orders that drive the prices higher or lower. Limit orders, they don't do anything. They just sit there waiting to be filled. And when the market gets there, the transaction becomes, it completes. But market sell orders say, I'm buying at whatever price is available because I need to close this position. And so when you send a market order, it takes however much it can from the first price, then it goes to the second price or the third price, and then it runs the book higher. So it's market orders, the ones that move the market and the price. Market orders are a lot more common among liquidations or unsophisticated investors. And I would argue that we're going to have a wave of market orders, whether that is, some big names. Like, I'll give you an example. The United States announced they're going to go buy some Bitcoin, right? That might be announced on a Friday, and then that might create a wave of retail interest over the weekend. That means Monday we're going to wake up with one of these guys. And so that's the point that I'm trying to make and how I see this playing out.
I agree with you. I definitely see the change in market behavior, and it's Bitcoin's grown up, and I would say that's a good thing. I think, and we're gonna explore this topic further during the culture segment. I think what you're gonna be able to do with your spot Bitcoin in self custody, and how you're gonna be able to fully utilize that in order to, because again, like, the whole point of all this, guys, is, and Mauricio is going to break this down later, is Bitcoin is pristine capital. pristine collateral. It is pristine capital, but it is pristine collateral. And I think that there's going to be a whole, spectrum of products that are going to be built around this. And I'm sure you guys over at LEDN are thinking about this deeply, right? So it's really exciting, guys. You're heading into a future where you won't have to sell your Bitcoin. That's the whole point, right? But you can still tap in to the wealth of your Bitcoin. Bam, bing, bam, boom. So used to saying it at this point. Anyways, guys, it's going to be a hell of a show. We have so many things to cover. We have a video of, I think it's Cathie Woods. She's talking about $1.5 million Bitcoin. Then who's this other lady? Where's she from?
No, I put it on to just do two things. So there's Franklin Templeton talking about $100 trillion coming to Bitcoin, but Nico really wants Mauricio's take on Cathie Woods. Absolutely. So we got that clip in there as well.
Absolutely. So we got Cathie Woods. We got Franklin Templeton clip. We'll play that during the numbers segment. Maybe we'll play that during the numbers segment, and then during the news segment, the GENUIS Act passed yesterday, and this is one of the big first industry major legislative wins in the United States. I really want to get Mauricio's perspective on this. What is the significance of it? We have a clip from the White House AI and crypto czar. He has his perspective on it, what the significance of it is. And then during the culture segment, we're going to be talking about all things Bitcoin collateralized loans, what makes LEDN special, what makes them unique. And it's just gonna be a great conversation. So if you guys are enjoying the show so far, make sure to smash that like button. We blew past 2,000 live viewers on YouTube and X, and Rumble still coming in strong at 276 live viewers. If you guys are enjoying the content so far, make sure to smash that like button. You're listening to Simply Bitcoin. I'm your host, Nico's, my co-host, Optimus Fields, and our special guest for today, Mauricio. He's the co-founder of LEDN, the best place to get yourself a Bitcoin collateralized loan. Anyways, guys, let's get into the no, first I have to give a shout out to our lead sponsor, and then we'll get into the numbers segment. I want to give a shout out to Bitcoin Well, the best place to build your automatic self-custody Bitcoin stack. To get started, you put in your email address, bam, bing, bam, boom, takes 2 to 5 minutes to get signed up, and you're ready to buy Bitcoin. What makes Bitcoin Well special, what makes them unique, is that it's an automatic self-custody Bitcoin on-ramp. What does that mean? That means that when you buy Bitcoin on Bitcoin Well, as soon as the funds clear, it goes straight to your self-custody Bitcoin wallet address, which of course, this is the right way to do it. You got to take self-custody of your Bitcoin. Every time you buy Bitcoin on Bitcoin Well, you earn something called Bitcoin Well points, and you could redeem those points towards a bunch of different prizes, like a Simply Bitcoin hoodie, a BitAxe, an orange Cybertruck, or you can play the Bitcoin Wishing Well contest, which we're going to be doing live for you guys right now, live on air, tossing a coin into the Wishing Well. Get your Lightning wallets ready. First person to scan the QR code with their Lightning wallet has won 489 sats. If you go to bitcoinwell.com/simply, you get 3 tosses into the Bitcoin Wishing Well. What are you waiting for? Head over to bitcoinwell.com today. All right, everybody, let's hit the numbers. I want to tell you guys about our sponsor, Stampseed. Is your Bitcoin in cold storage really secure? Are your seed words really secure? Stampseed's do-it-yourself kit has everything you'll need to hammer your seed words into commercial-grade titanium plates instead of writing them down on paper. Don't do that. Paper sucks. You want to literally stamp your seed into this plate of titanium. Your words are actually stamped into the metal plate with this hammer. So once your words are in, they aren't going anywhere. No risk of the plate breaking apart and your pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and most importantly, because this is generational wealth, time-proof. All things that paper is not, allowing you to hodl your Bitcoin for the long haul. I mean, here is the plate that they crushed. They put in water, they put a blowtorch to it, and as you can see, the words have survived. Stamp your seed on Stampseed.
And you can use promo code SIMPLY to get 15% off anything on their store. Head over to stampseed.com today.
All right, everybody, we are back. Go to stampseed.com today. Store your generational wealth properly. Don't write down your seed words on paper. Stamp them into titanium. Go to stampseed.com today. Get yourself the kit. Use promo code SIMPLY, 15% off anything on the store. At the time of recording, the Bitcoin price is $104,040. Block height, 901,924 sats per dollar, still under 1,000, 961. Market cap 2.07 trillion. Bitcoin versus gold market cap 8.71%. Percentage issued. That I think that's wrong. That's wrong, isn't it?
Yeah, that's totally wrong.
Yeah.
Clark Moody's dashboard's acting up.
Yeah, we got to remove that. Move it from favorites. All right. Decline from all-time high. Negative 7.1%. If you buy Bitcoin right now, you get a 7.1%. Is it right on your end?
Right on mine. It says 94.67.
94.67. Anyways, but it's removed. Realized monetary inflation, 0.84% in the grand scheme of things. I mean, dude, it's just Bitcoin just continuing to take fiat currencies to absolute school. When me and Opti started covering this number, like, what was it at? It was at like,
It was at 3 point, maybe it was like 3.5 or something, maybe
dude,
4. I forget.
It was crazy when we started covering this like years ago. Now it's under 1%. So even if they get it back to that 2% number, good luck. Anyhow, so I have two videos. Should we play the Franklin Templeton or I'm gonna pass it on to Mauricio. Mauricio, do you want to hear from Cathie Wood or Franklin Templeton?
Let's do Cathie first.
Let's do Cathie. Here we go.
I want to start right with Bitcoin and what you see as the outlook for Bitcoin's price. In recent weeks, you've come out and said $1.5 million per Bitcoin by the year 2030. Since then, though, we've seen quite a few outflows. We've seen a lot of volatility. Shonali just went through that. Is that still your view? 1.5 million by 2030?
Yes, it is our view. I think right now we're in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off. So I think that's what we're seeing. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up.
Okay, so I mean, Mauricio, 1.5 by 2030. Thoughts?
I mean, I haven't had the privilege of taking a look at their model, but again, I think to if you wanted to compare Bitcoin to gold, even if you were to say, okay, Bitcoin's going to get to the same sort of size of an asset class that gold is today, Bitcoin would have to a little over 10x from here. So if you just want to use a base case that without any sort of additional monetary printing, we just want to say, okay, there will be other asset classes that should be demonetized. I'll give you an example, US real estate or US debt, okay? If we just say no more printing, in a universe of assets and the relative sizes, we believe that Bitcoin should be as big as gold because it's just a newer version, just much more functional, much more verifiable than gold. If you just take that base case without any further printing, you would assume or you would think that the assets that are not as good for hedging against inflation, so US debt or property, you would start selling those things and favoring Bitcoin even over gold, right? So even that rebalancing itself would lead to a 10x in Bitcoin. That's not going to happen in a vacuum, right? Like between now and the time we get there, there's going to be continued debasement from the currencies. So I think Cathie's taken into consideration two things. One, the speed at which Bitcoin is getting monetized relative to other asset classes is much higher. So think about it. You put yourself in the position of a person. I mean, if you're listening to this show, you probably have a bias already. But let's just say that for whatever reason, you win $1 million in the lottery tomorrow. What percentage of that are you going to allocate to Bitcoin versus property, right? And if that property, if we take your personal residence aside, if you already own your home and you get $1 million worth of prize money, you're not going to buy a second home, right? Like you're most likely going to buy more Bitcoin and not gold. And I think macroeconomics is just taking what you would do and multiplying that by 300 million people that live in your country. So if those are your views and your bias and you're an informed or rational economic actor, you can assume other people are thinking similar to you, at least if they feel that same way. And so I think, is it possible? Definitely it's possible, right? Like, in Venezuela, just in the time I've been alive, Venezuela has removed 14 zeros from its currency. That's more than $1 trillion worth of zeros that have been removed. Is that feasible in another country or in another fiat currency? Yes, obviously not in the same, not in as dramatic of a fashion as what happened to us. But yes, fiat will continue to get debased, and the zeros are endless. Like the amount of zeros you can wipe out of a currency. I mean, I don't know if anyone's done the math, but I'd love to see how many zeros have been removed from currencies since 1971. I bet you it's a big number.
Yeah, absolutely. Absolutely. I think that's a good point too, because it's like 1.5 million. Is it in today's purchasing power? Right.
No,
because I remember, like, and I'm old enough to remember this, right? Like, $1.5 million 10 years ago was a totally different conversation to $1.5 million today. I mean, just with the pandemic alone, I live in Miami. Okay. Just in the pandemic alone, like literally within 6 months, the price of real estate doubled with the amount of money printing that they did. So that quote unquote 1.5 million would have literally bought you half of what it would have bought you 6 months prior. Right. So I think that's a really, really good point. And yeah, I mean, Opti, you do have the model, right? You do have the.
Yeah. I pulled it up so Mauricio could see it. So let me pull this up. Here we go. So basics for the audio here. Hold on, let me pull this out so you guys can see this. The basics for everyone that's on audio. We have Cathie Woods' bear prediction 2030 is 300K with a CAGR of 21%. We have her base case, which is $710,000 with a 40% CAGR. And then her bullish case is, and I think these numbers, this might be the older one. So, I think she's updated these.
She actually raised it.
Yeah, I think her base case is 1.5 million, but I couldn't find that one as quickly on the stream. But her bull case, 1.5 million with a CAGR of 58%. And I think Saylor was just at the conference basically saying the last 4 years, the CAGR is roughly 57%. And then just moving down a little bit, price target assumptions. And you can see the various different assumptions of institutional investments, how much they hold, the digital gold meme, emerging market safe haven, nation state treasuries, the size of those, the corporate treasury amounts, and then, of course, Bitcoin on-chain financial services. So, there's the basic breakdown, Mauricio. And she is moving these up and getting more bullish as the blocks come in.
But do you see how similar it is to the things I just broke down?
Yeah, exactly.
And it's exactly it. It's her big components for price appreciation are the debasement of U.S. of government debt, which is there. That's the nation state treasury bucket. It's the cannibalization or the demonetization of gold as an asset class and into Bitcoin. And the rest are just like tiny call options, right? Like emerging market, safe haven. Like the reason why she puts such a big interest in institutional investment, which actually I agree with, and I forgot to mention this, is the fact that we just spent a long time discussing how intentional and deliberate these guys are when they're buying their Bitcoins, so that they don't move their price. In the same way that they are so deliberate to buy it, they're also going to be not the first people to sell it, right? And so nation states and large corporate treasuries are in many ways one-way streets, right? Like these Bitcoins are getting scooped off the market with the expectation never to return back into the order books, right? Like that's the expectation for these people. They are very, very, very long-term buyers. That again is very different than the guy that bought 10 Bitcoin at 100 grand and Bitcoin double, all of a sudden he's sitting on life-changing money that he's never seen, 100 grand, and he wants to move out of his basement and do something, so he goes and he rushes to sell it. These types of investors are very different, have very different incentives. They're going to see a 2x on that, and they're just going to say, great, let's buy more, right? They don't have any need to sell that to do whatever they want. They're actually buying Bitcoin a lot of times with their excess cash, right? And so it's not that they have a need to go and sell this. They're just doing, Bitcoin's doing what it's supposed to be doing. So I think Cathie is correct, or the ARK Invest team is correct in sort of highlighting this institutional demand bucket as in some ways like a one-way street. These aren't going to be coins that are going to be put back in the market anytime soon. And so that should be added to this pile of Bitcoin that's getting drawn off and not putting selling pressure back on the book for whatever reason, right? Even if it goes higher or if it goes lower. If it goes lower, they're not getting liquidated. If it goes higher, they're not taking profits, because what are they going to take profits back into? The dollar? Like, that's what they left in the first place. So these things are I think that analysis is directionally correct to the way I think about it.
I completely agree with you. Guys, we have a hell of a show lined up for you guys. We're going to be talking about the GENUIS Act. First, pro-Bitcoin, I would say pro-crypto, pro-stablecoin legislation. I would say it's pro-Bitcoin, pro-crypto, and pro-stablecoin legislation that was passed in the U.S. Senate. It's kind of a big deal, a big milestone. We have Mauricio, again, co-founder of LEDN, in the show today. We're going to do an analysis of that, break down what is the significance of it. Is it a nothing burger? Is it a big deal? We have a video of the AI and crypto czar from the White House, David Sachs. He has his thoughts on it as well. So we're going to be doing a deep dive analysis on the GENUIS Act that passed in the Senate yesterday. It will more than likely get signed into law by President Trump. And then, of course, during the culture segment, we're going to be talking about all things LEDN. So stay tuned. Smash that like button if you guys are enjoying the show. And 2,500 people watching live between YouTube and X, and 230 of you guys watching live on Rumble. So smash that like button. We will be back in just 1 second.
I want to give a shout out to our partner, LEDN, the leader in Bitcoin-backed loans. Unlock the liquidity in your Bitcoin without having to sell your Bitcoin. They've issued $9 billion in loans to over 10,000 customers since 2018. I absolutely love these guys. Not only do I have an account with them, but I also have a loan. And what I love about them is that there are no monthly payments, and you could pay back the loan at any time. As soon as you send your Bitcoin as collateral, you'll have cash in your account within 24 hours. Over 1,000 five-star customer reviews, and they've never lost a single dollar or sat of customer money. Go to learn.ledn.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, Cold Card. If you're serious about self-custody, Cold Card is the best Bitcoin hardware wallet. There is no second best. The Cold Card Q is the ultimate air-gapped Bitcoin signing device, complete with a full keyboard, large screen, camera, NFC support, and much more. Do you prefer something sleeker? The MK4 is trusted by hardcore Bitcoiners around the world. Both are built by Bitcoiners for Bitcoiners, secure and open source. Simply Bitcoin viewers get 5% off with promo code SIMPLY. Take self-custody of your Bitcoin today with Cold Card.
All right, everybody, we are back. Scan the QR code on your screen right now. I'll take you directly to the Cold Card website. Get yourself the best Bitcoin hardware wallet in the game, the Cold Card Q or the MK4. Anyways, I want to cover today's news. Pretty significant. And I love the way that the media framed it as well. So we covered this yesterday, but I want to take advantage of the fact that we got Mauricio on the show today because I want to get his perspective on this. So Senate passes GENUIS stablecoin bill, giving crypto industry first major legislative win. The GENUIS Act establishes the first federal framework for peg stablecoins, granting sweeping authority to the Department of Treasury and opening the doors to banks, fintechs, and retailers. Democrats failed to secure a provision barring the president from profiting, even as Trump disclosed earning $57 million from token sales in 2024 alone. Industry giants like Amazon and Walmart are reportedly moving toward stablecoin style offerings as payment networks brace for disruption. So kind of a big deal, I would say. Here is the AI and crypto czar from the White House. He has his thoughts. I'll play the video. Wait, where is it? Opti, what? Man, we're going to have to play it the old-fashioned way, I guess.
Again, it wasn't me, but I'm getting blamed for it.
Anyways, so here are his thoughts. Let's check it out.
Oh, I don't think we can hear.
He said he can't hear Nika.
Oh, that sucks. Okay.
Anyways,
I'm just going to play it in the background. We have enough information to preface this. But yeah, I mean, he's just basically making the case that this is going to unlock trillions. It's going to bring banks into the industry. Banks are going to start issuing stable coins. But that's essentially the case that he's making. So I'm going to pass it on to Mauricio. Mauricio, what is the significance of this bill? Is it a nothing burger? Is it a big deal? Is it further kind of legitimizing the industry in the eyes of traditional finance? Does it matter? Does it impact your business? Mauricio.
Yeah, thanks, Nico. It's a huge deal. I can't stress enough how big of a deal this is. Keep in mind that this bill is getting passed as one of the first major bills, after Trump's sort of spending bill, the big, beautiful bill. But like that also gives you a sense of prioritization within the administration, which is they move fast on this. Why is this so important? A few things. Number one, what does this do to the sort of global banking environment? If you look before stablecoins, the only way that foreigners could hold dollars was either through having a bank account in the US by some form of secondary residence of some type, because most banks in the US require you to have a US domicile or an address. So it's very challenging for you to have a US-based bank account with a US bank that has protection from the FDIC, which is Federal Deposit Insurance Corporation, meaning your deposits up to $250K are insured by the Federal Reserve or by the FDIC, sorry. So these insured deposits, this sort of the safest way to bank, was only available to people living in the US or those who had access to a full-on US bank or bank account. Everyone else was left with two options. You either hold your dollars in what's called euro dollars. Euro dollars just mean you hold a dollar deposit in a non-US bank. And these euro dollars were typically not secured or insured by the FDIC. And in many times when the local currencies start collapsing, like they did in Venezuela, like they do in Nigeria, like they've done in many parts of the world, the first thing that the regime does is it blocks your ability to buy dollars through the banks. And in some cases, like in Argentina, it takes all of the dollar deposits in the banking system and pays you with their crappy fiat, right? And so that's what's called in Argentina was known as el corralito. So historically, people have been very wary of holding US dollar deposits in a non-US bank, because in the case where your currency fails, which is precisely why you want to hold dollars, the dollars go away and they get converted to your crappy fiat that you were trying to get out of in the first place, typically at a much crappier rate set by the government. That's devaluing set fiat that's giving you in exchange for your dollars. It's trading you mirrors for gold. It's not, it happens all the time. And so why is this so important? Now, people all over the world have access to a US dollar instrument that does not require a bank account, whether that is in an offshore bank or even in a US bank. Anyone could just spin up an Ethereum address or a Tron address or a Solana address and get Tether sent to that. And they have now US dollars that can be sent anywhere around the world. And by the way, this dollar is backed by US debt. So the default risk or the ability for you to not be able to turn that into a real dollar is very, very low. It's actually much safer, I would argue, to own a token of a dollar that's secured by a US Treasury than even to hold deposits in a US bank. Because if you're holding more than 250K in a US bank, only 250K of that is covered by FDIC insurance. The rest is not. So if that bank collapses, presumably you would only get 250K. If you had 500K in stablecoins, those 500K are backed by US Treasury bonds. The ability for you to redeem that into dollars is much better in any amount, in particular in amounts higher than 250K, which I know isn't a problem for most people. But if you're a large corporate outside of the US, that is a huge benefit for you. So number one, this deals a massive blow to authoritarian regimes all over the world that try to gatekeep people from using strong currency in order to force feed their garbage fiat into these people's hands. So it really deals a blow into castrating or authoritarian banking regimes with undue and unfair restrictions for people to protect the value of their life's work. That's number one. Number two, if there was ever a chance for any other currency in the world to gain a semblance of relevance in the new economy, it would have been for that currency to allow better regulated stablecoins faster than the US dollar. For example, if the euro had enabled a way to easier and faster for issuers to sort of feel to come into the regulatory purview and offer a euro stablecoin, I fear that we would have at least a conversation around euro-based stablecoins. That didn't happen. The United States was the first country that moved to regulate stablecoins. Therefore, the incentive for any issuer to now go and try to set up another real currency pegged stablecoin, like a euro stablecoin or a Japanese yen stablecoin or a yuan stablecoin, those things have basically now died before they were ever born. Because why would you go with a number 2, number 3, number 4 currency when the number 1 currency just gave you the path to get regulated and get the proper rails? And so I think this now, and then the third, the tertiary effect that is going to happen from this, which I think is much more minor in a global context, is the fact that we have all been at the mercy of credit cards and payment processors up until now. If you ever wanted to pay for something, you have to pay 3% to Visa, 3% to MasterCard for anything you wanted to tap for. That's a racket. People shouldn't be paying 3% every time they buy coffee. Like, there's no real reason for you to do that. You see now that the on-chain fees to transact dollars are now 2 or 3 cents. So that's going to be better for merchants and for buyers. And I think it's going to eventually deal a particular blow to payment processors like Visa, MasterCard, et cetera, who have built a moat around these networks and basically have a monopoly on these payment rails. I think as the sellers realize that they can keep 3% more of what they're selling by taking stable coins, and as the buyers realize that they can tap that just as easily and save 3%, I think over time this is going to take a lot of share from these sort of quasi monopolies that have been racketing us for so long.
One of the things that you brought up, Mauricio, that was fascinating to me, I had to write it down so I wouldn't forget, which was the fact that now worldwide, essentially, you're going to have competitive currency markets, right? That's essentially what I heard you say, where, if you're in Venezuela, or if you're in Argentina, or if you are, in Africa, and you don't have the privilege of having a relatively stable fiat currency, all of a sudden now your ability to essentially access a fiat currency that is much more stable, the US dollar, of course, you're now going to have that capability just by literally downloading a wallet. And what that's the geopolitical implications of that are going to be massive. They're going to be huge. Like I see a lot of governments. I'm just thinking like, you know, kind of game theory wise, I envision a lot of governments not reacting very well to this because essentially it allows people to escape these kind of local fiat regimes. Is that right, Mauricio?
It gives them a much faster and easier way to opt out of the local fiat. And it makes it much more difficult for the authoritarian regimes to prevent that from happening or instilling enough fear from that happening. Because now a stablecoin, you know, think of yourself in a hostile environment, right? Like if you're in a place like Venezuela, and let's just say tomorrow the regime wakes up and says, "Oh, I don't want anybody to be transacting in dollars. I don't want anybody to be using dollars, right? I want you to use this garbage currency that nobody wants." You, as the seller, you've produced, you know, work. Let's just say you have a farm and you have to buy the seeds again and the things you need to re-harvest that potato that you're about to sell. You know that if you sell that potato for bolívares, you won't be able to buy back the things you need to basically grow the potato again. So you need to sell it in dollars or some type of dollar equivalent, right? You know you can't use the local banking system because they don't allow you to deposit dollars into it. In fact, they will punish you for doing so. Then what are your other options? Your other option is, okay, do I take cash dollars? So cash dollars are a liability, both because there's a lot of fraud in cash, like Venezuela and other places where cash is abundant. People walk around with their, the verification pens, you know, the little pens you have to scratch the dollar to determine if they're real bills or not. And then those little UV lights that you put under the dollar to make sure that they are actually dollars. People in Venezuela, in hyperinflation environments, everybody walks with a pen, and some people even have that little light and they carry it because they're transacting on cash so often and they've been defrauded so often that they have to keep checking the cash to make sure it's real. Not only is that a risk, the other risk is that in an environment where the world was told or the country was told that having dollars is illegal, if you ever get stopped at a checkpoint or anything and they find dollars on you, those dollars are gone, right? And so along comes this stablecoin, which is now offered by a US sanctioned regulated entity that you know is good for the dollar. It's in a format that you can have on your phone, on an app. If you don't even have to have your phone, you can just memorize your mnemonic and you don't need to have it either. So it's a much better tool for you to accept this payment than dollars in your account, which you can't do, or even cash, which becomes a big liability. So it gives people more freedom to choose their instrument. And by doing so, and by choosing that dollar over the local currency, it basically it makes the authoritarian regime's lives much, much harder, because the way these guys finance themselves typically is through printing more fiat, because they don't have the ability to access bond markets because they're sanctioned. And typically they have nothing to tax because everyone that can produce anything is gone. So their only way of financing their deficits is by printing money. And if they are not able to force feed that printed fiat into you and force you to keep it, what happens is they force feed you the fiat, you just get rid of it. And so every time they print, inflation gets magnified like 2-3x because of the velocity through which you get out of that crappy currency. So it will make, having these stable coins will be a check and a balance against irresponsible governments. And I would argue that because of it, you're going to see likely more inflation in offshore markets, and you're going to see more authoritarian attempts to control and fix a fake value of a currency that will ultimately fail like they always have.
And what's really interesting about this too, Mauricio, from like a psychological phenomenon too, is people are going to get exposed to a more stable form of currency, meaning there's an idea, a seed planted in their head that says, wait a second, we don't have to live this way. There's an alternative, right? And I think where the kind of geopolitical class, specifically for authoritarian regimes, as you mentioned, is going to be, they're going to have a hard time convincing their population to use their local currency. And that's their source of power, their ability to print money, right? So the geopolitical implications of this are massive, right? So yeah, massive. This is huge. This bill that this passed, and you said something earlier too which was very significant, right? You know, there's the big, beautiful bill, right, which is Trump's agenda, but also he stayed true to his word, right? This is one of the first bills that's getting passed through the Senate that has nothing to do with all the other kind of policy stuff that's happening. Politics is crazy these days. Let's focus on Bitcoin, but it has to do with our industry, right? Which I find really interesting. I do want to focus on something that you said earlier, which is how this could potentially be a disruptor to Visa and MasterCard, which if anyone that doesn't know, basically Visa, MasterCard, American Express, kind of a fan of American Express. They all take, but again, I'm not the vendor. That's the thing, right? I'm not the vendor. I'm the consumer, right? But as a vendor, if you guys don't know, you have to pay like 3. I think some of them go up to even like 4%. So could you imagine that? Like you make a sale. This isn't tax. This is just for accepting a credit card. Right. That's why at gas stations, sometimes it's like taped on where it's like, we don't accept transactions under $20 or something. They literally do that because of that specific fee. Right. And they've been able to do that because they have a complete moat. Right. But now when there's a disruptor, when there's an alternative form of digital payment, how are they going to justify that 3% fee or that 4% fee? Right. So could you talk a little bit about that, Mauricio?
Yeah, definitely. So I think, like you mentioned, Nico, for the people that don't necessarily or aren't too familiar with how this works, if you open up a coffee shop and you want to start taking payments in credit cards, you have to sign up for a payment processor. And that payment processor will tell you, here, you can get this device. It'll accept payments in Visa, MasterCard, American Express. Here are the fees you must pay for each one of these payments processed. So broadly speaking, they range anywhere from 3 to 5%, and there's typically a sort of fixed fee component. So, for example, in a debit card transaction, you might have to pay 25 cents and nothing else, right? Because it's a particular fee structure. In a credit card transaction, you might have to pay 10 cents plus 3% of whatever's being bought, right? And so once you have those hurdle rates, so for example, have you ever gone to a convenience store and says, we don't take debit card for anything less than $5? Why? Because 25 cents divided in $5 is 5%. So it doesn't make sense for the company to lose 5% margin on a $10 sale just because they wanted to accept the debit card. So a lot of these transaction fees force arbitrary changes in price for some of these goods. I'll give you the example. Many Canadians watching this will probably know Tim Hortons. Tim Hortons is a very famous Canadian coffee chain. Historically, Tim Hortons never accepted credit cards for payment, because they didn't want to give up the 3% and they didn't want to have to raise their prices of everything for 3%. So all of us going to Tim Hortons had to pull out our debit cards and cash to pay because they just didn't want to take MasterCard and Visa because they didn't want to raise their prices 10%. Eventually, a few years back, they had to bend the knee because people were so upset. They would much rather pay 3 cents extra or 6 cents extra on the coffee so they could tap their MasterCard. But what I'm trying to illustrate here is that the ability to pay with these cards is something that vendors have to pay for. And to the user, you don't see it, but you're also paying for it, because oftentimes companies just bump up prices by 3% to cover the price of your credit card. And I'm also sure that many of you here have tried to pay with a credit card for something, and they've given you a 3% credit card fee for using the credit card for payments, right? So it always goes back to, we have to pay the transaction fee, right? The transaction fee in a credit card, they have a big enough moat that they've been able to squeeze or force the vendors to basically give up 3% of their margins every time somebody taps. With a stable coin, you are now going to be making it much easier for people to carry cash, because the annoying thing about cash is you don't want to carry a couple grand around in your wallet, but you also don't necessarily want to enter debt if you didn't need to by using the card and then having to go back and pay it. So presumably, if you just had a more convenient way of carrying cash, you would be more likely to use it. Stablecoins do exactly this, is because they will allow you to carry whatever balance you want on your phone, not different than what it would be in your Visa card. You can tap it. You'll be able to tap it just like you tap your Visa. The transaction fee will be 3 cents as opposed to 3%. And that is a very material impact for a business. If I told any coffee shop on the street that they can save 2% by just adopting stable coins instead of cards, I would be surprised if you started seeing in due time discounts or incentives for people using stablecoins to make the payments at any particular point instead of credit card. So for example, if you pay stablecoins, you get this price. If you pay credit card, you got to pay up this price because we have to cover the transaction fee. So I wouldn't be surprised if we started seeing that. I think vendors will be incentivized to get more people to use these because they keep more money. And as I think, for vendors, it's going to be much better. And when you have a network of vendors encouraging you and giving you financial incentives to change your behavior, I think that's very powerful.
100%, and the market behaviors here are going to be fascinating, because all of a sudden these vendors are going to have an alternative to the credit card companies. The credit card companies are going to feel the pressure, and they're going to have to pivot in a way, right? In order to stay competitive, right? So I love competition. I love, kind of market dynamics and market incentives. I think that they didn't see this coming, like a lot of, innovations that happened, like Blockbuster, Netflix. I love the like one of the famous stories. Like if you take a look at the Netflix founding, do you guys know that Netflix tried to sell to Blockbuster and they kind of like laughed them out of the room? And then 10 years later, just like Netflix completely, overtook them and Blockbuster went out of business. So it's these types of disruption. Oh, and then the Kodak one is even crazier. Did you guys know that Kodak had the first access to digital cameras, but they decided to put it on a shelf because it would compete with their film business, right? So these kind of paradigm shift and digital innovations that we're kind of going through, things change very, very quickly. So it's important to stay on top of it. And I really appreciate Mauricio coming on the show and doing kind of like this deep breakdown and analysis of the significance of the GENUIS Act passing. Guys, we're going to talk about all things LEDN, Bitcoin collateralized loans during the culture segment. You're going to want to stay tuned. Guys, the reason that we love LEDN here at Simply, it's a great way to access the wealth of your Bitcoin without having to sell your Bitcoin. And if you don't know what that means, stick around and we'll explain it to you. We'll be right back in just a second.
I want to give a shout out to our partner, HIVE Digital Technology. Why HIVE in 2025? Unstoppable growth. As the first ever public miner, HIVE's position to quadruple their global footprint, making them one of the world's fastest growing miners in 2025. And with elite operations that consistently top the industry in Bitcoin mined per exahash, HIVE's now headquartered in the USA. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable Bitcoin mining. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. I want to give a shout out to our sponsor, Casa. Casa makes self-custody easy and secure. As a Bitcoiner, I care about holding my own private keys, but multi-sig can sometimes get tricky. Casa nails it with a multi-key security. So even if one key gets lost or stolen, your Bitcoin stays safe. And you don't give up custody, meaning no one could access your Bitcoin but you. No seed phrase anxiety, no single point of failure. I've been telling my friends and family about Casa for years. Their UX and UI on their app is by far the best in the industry. Inheritance planning is built in, and they even offer Casa for Business if you're thinking about a Bitcoin treasury. Hit up casa.io today and use promo code SIMPLY to get 10% off Casa Standard or Casa Premium. Head over to casa.io.
All right, everybody, we are back, and joining us in the house today is Mauricio. I thought Mauricio was the co-founder. Are you the founder or the co-founder?
Co-founder.
Opti.
My bad. I just took it
I
from the
love
website.
Adam.
I took it from the website.
No, it's all good.
So we have the co-founder of LEDN. These guys are literally one of the top players in the Bitcoin collateralized loan space. I'm a little bit biased here. Maybe it's the Venezuelan connection, but actually, you know what has me like the biggest fanboy of LEDN is the fact that there's no monthly payments. That to me is the game. That is the game changer for me. As a business owner, of course, like you're put in this kind of predicament, you start to build a Bitcoin treasury in your business, right? And then you're like, I don't want to sell this. The whole point of building a Bitcoin treasury is, so like you're very well positioned in the future. But you might have expenses. You might be I mean, should we hint to it, Opti? Should we hint to it?
Yes, I don't know what you're hinting at, but yeah, why not?
You might want to build out a professional studio.
Hey.
But you might want to do things in your business, right? So but you don't want to sell your Bitcoin, right? And you got to make payroll. So what do? You could take a Bitcoin collateralized loans, right? And that's why that's why the phrase, it's a great way to access the wealth of your Bitcoin without having to sell your Bitcoin. So this is a great tool for everyone. And again, it doesn't come with trade-offs like everything else, but it's a great tool for you as a Bitcoiner to basically, again, not have to sell your Bitcoin, but borrow against it essentially, right? You have to be careful. You have to be responsible with, the essentially not getting margin called, right? They're very transparent about it. They'll send you an email. You have to be on top of your loan, right? But if you're responsible, this is a great tool, again, so that you don't have to sell your Bitcoin goes up in value. And one of the things that I love about it, again, is no monthly payments. That to me is the biggest selling point.
Game changer.
To the point where I initially, when I started my loan, and Mauricio was kind enough to like handhold me through this process. I was like messaging Mauricio. I'm like, dude, so when do I have to make the payment or something? He's like, dude, there are no monthly payments. And then I'm like, what? I'm like, are you serious? Because I was used to another provider that was the case, right? So yeah, man, Mauricio, welcome to the show, dude. And I don't know if I did the elevator pitch, but always happy to have you, bro.
Thank you, man. Listen, and I want to address Thomas's question on the chat. What's the timeline on California loans? Because I know that we get that question a lot around California. So we submitted our lending license application in California about 3 months ago. So it's out of our hands in terms of it's being reviewed by the regulators, but we are optimistic that hopefully towards the end of this year or early next year, we'll be able to lend to you in California. Hopefully sooner. We'll keep you posted. But the elevator pitch is that LEDN is a place that lets you use your Bitcoin as collateral to get the dollars you need without having to sell it. In most places, selling your Bitcoin triggers a taxable event, whereas taking a loan and using your Bitcoin as collateral typically doesn't trigger a taxable event. And what people like about our products is that most if you're a person or a company that's on a Bitcoin standard, you all your savings are in Bitcoin, but you have a fiat obligation that comes due, or maybe an investment opportunity where the investor doesn't take fiat, or you just don't want to get rid of your Bitcoin, and you just don't want to get rid of your Bitcoin to invest. You can use your Bitcoin as collateral for a loan at LEDN, get the funding you need to cover that expense to invest in that new business, and when you get the payment or when you get the cash flow back, you can repay the loan, get your Bitcoin out, or you can keep the loan open and Bitcoin appreciates over time. And at a future date, you can sell a fraction of the Bitcoin to repay that loan. So in any event, it lets you hold on to good money and borrow money and borrow bad money and spend that bad money while holding on to your good money. So anyone that's experienced a situation like we did in Venezuela, learned the hard way that when you got dollars, the worst thing you could do was spend those dollars if you could instead borrow bolivares and spend that instead. So it's really a product that has been used, through eons and eons by humanity in order to hold on to good assets or good money and borrow weak assets or weak money. It's not different than a dollar mortgage on a U.S. property. This is just a way for you to mortgage your Bitcoin.
Absolutely. And then also too, guys, like this is a non-taxable event because this is a loan. By the way, like if Jeff Bezos or like Elon, right, like one of the ways that, you always hear this, like these billionaires, like they don't pay these taxes. They're like, what's going on? So what they do is that they take their stock, they take it to a bank and they say, hey, could you give me a loan against this stock? Take this stock as collateral. And they get basically a cash loan, and because it's a loan, it's not a taxable event. So think of Bitcoin, as this pristine collateral that you can use as a tool, but you have to do it responsibly. Now, I do want to address some questions in the chat. There was one on Rumble and there was one, I believe, on YouTube as well. Are these loans only for businesses? Or are they for personal loans? So for addressing the question on Rumble and on YouTube, no, these are individual loans.
No, we do businesses too. So we can do business loans, we can do personal loans. We even service some publicly traded companies, in fact, that come to us because they can't offer or access bond markets with the ease that Michael does with strategy. But we list, or we service publicly listed and private businesses, and family trusts, etc., and individuals as well. So if you're looking to onboard a business, contact us, contact our team. We'd be happy to onboard that for you. But we can service your entity, your trust, your business, you as a person.
And I see someone in the chat on Rumble too describing, basically they're talking about a home loan. I know that you've facilitated that. Basically, an OG Bitcoiner that didn't want to sell their Bitcoin, and they essentially wanted to upgrade their house or buy a new house, probably because of the wife. And looking at you, Sophia. With the guilty face, she looks back. You guys have helped that. You guys helped that OG Bitcoiner do that. Is that correct?
That's right. So a lot of our clients are, either entrepreneurs, self-employed, or early Bitcoin investors, and they're now Bitcoin retired. So when people are in that position, like I'll give you the example of a person that holds, he's lucky, he's like, $10, $20 million worth of Bitcoin, and he doesn't have a job today, clearly, because why would you? So let's just say that person wants to buy a new house, right? Or his wife, their family's growing, they had her second kid, they're trying to move it to a bigger place. That person typically the first thing they'll try to do is they'll go to their bank, who they've been with for their entire lives, and they'll say, I'm looking to buy this property. I need a mortgage. What would you like as a down payment? And the bank will turn around and say, well, what's your income? And the person will say, oh, well, I don't have any income. I'm retired because I'm wealthy. I live off of my investments. And they'll show you, you'll show them your Bitcoin position. And they'll say, well, A, that's not an asset. And B, I cannot lend you money because you have no income to buy the house. And then the person will say, but I have $10 million worth of Bitcoin. And the bank will turn around and say, that's not an asset and that's not income. I need to assess your income to let you buy the house. And so basically this person is shut out of traditional financing options. And they don't want to sell their Bitcoin to buy their house. So they'll go to a place like LEDN, where if the house is $1 million, they'll have to put $2 million worth of Bitcoin collateral with us. We'll advance them the $1 million. We don't go under credit history. We don't check their credit record. For us, your Bitcoin is your credit worthiness. So you get the $1 million you need, you buy the house. And the other benefit from that is that if you are using us because you are long Bitcoin and short dollars, the worst thing we could possibly do is to ask you to make us dollar interest payments every month, because that's precisely what you came to us for. You didn't have dollars, you borrowed them. So our loans by default, in no format do they require you are obligated to make monthly interest payments every time. The cost or the accrued interest for those loans accrues into the outstanding amount until you decide to repay that loan. And if you get to the end of the 12-month term and your loan to value is still under 60%, you can roll that loan into a new term also without having to make monthly interest payments. So I have clients that have had loans open for 3 and 4 years, and they haven't made monthly interest payments. I think they've paid back down partially when they get a windfall that they can make a repayment at any time, but they just keep the loan rolled. They roll it and they roll it and they roll it. Many times the value of their Bitcoin they put as collateral has far surpassed the value of the house that they paid for in the first place years ago. So it's a product that is designed for people and businesses living on a Bitcoin standard. And I think your point about no monthly interest payments is an important one, because there's, when companies that are seeing the success we're having after 7 years of building this thing, a lot of companies are now starting to come into this space and wanting to participate, not because these products are new, they've been around for 7 years, but they're coming in now because they see dollar signs and they want to take a slice out of what they think is going to be a big pie. And the way they're trying to seduce people away from a company like LEDN that's tested and proven and has been doing this and really pioneered this thing 7 years ago, is by trying to say, or offering, sexy headline rates, or hiding some fees in the fine print and offering you, rates starting from X. But then when you go and say, okay, well, how do I make this loan similar to LEDN's, where I don't need to make monthly payments, where the amounts start at this much, and where I have the ability to redeem excess collateral. These things aren't available in these services, or they don't offer them. But if they offer them, they offer them for a fee. And then when you add everything together, it works out to that loan being oftentimes, most times, more expensive than ours. And if not, at best, you're saving a few basis points to take a massive risk with a lending product that's been out for just months instead of 7 years.
Absolutely. And I think that's the key point too, guys, like, because I'm seeing it in the chat kind of live, like, the last couple of weeks or so, just kind of major announcements by kind of different players in the space. They're trying to get into the Bitcoin collateralized loan game. And this is something that you guys have to understand about LEDN, right? It's a time and tested product. You guys have proof of reserves. I think that's incredibly important. No monthly interest payments, right? That's a big differentiator. And what I really, really appreciate about what you guys do as well, Mauricio, is you haven't forgotten our roots, my friend. So your guys' minimal loan rate, and we get this question all the time on Simply. You guys go to $500 is the minimum loan rate, right? So you're not seeing that anywhere else, because everywhere else they see the dollar signs. Mauricio, you didn't forget your roots, my friend.
But I mean, listen, you can tell a lot about what anyone's trying to maximize for, a lot more by what they do than by what they say, right? Like if somebody's telling you, I want to bring a product for the people and the minimum amount is like 50K plus or even 10K plus, and the product is not accessible in places like Latin America or other parts of the world, then this is not really, you're putting out a product that's designed to beef up a book by targeting large borrowers, right? You're not really trying to facilitate access to those who need it the most. So, as you know, I think what comes at odds sometimes is that they will try to portray these solutions as sort of all encompassing and done for the greater good and for the benefit of the people. But when the product comes out, they're not benefiting that people that they're talking about. They're benefiting the actually entire opposite side of the spectrum. And I'm not saying both types of people or everyone doesn't have a legitimate use for the product. Whether you're a billionaire or you're Miguel in Medellin, both of you have a legitimate use case for this product. Both of you should have access to this product. I'm not trying to say one person is worthy and the other one isn't. What I'm trying to say is the hard part is servicing Miguel in Medellin. That's the real hard part. Servicing Michael, with $1 million loaned out of some U.S. state, that's not hard. You have 5-6 loans. You'll have a book in the millions with like 10 clients. That's very easy to manage. That's very, that's very sort of simple to do relative to an operation that has to process loans as low as $500 in different parts of the world and manage that person when the market gets volatile, and having the tech stack and the team that's designed to do that. So at LEDN, that was always our ethos. We wanted to build, and not only just for Miguel's sake in Medellin. If you're a person that has $1 million and still wants to borrow, I would encourage everyone to try a $500 loan before they go 2 feet deep, right? Like, it is about accessibility. It is about making or getting the product closer to people and reducing the friction. It's not about cherry picking the juiciest clients for a particular outcome. It's if you really want to do this, there's ways to do it. And I would argue that, if you're going to come out and try to compete with LEDN, don't do just the easy things. Like, do the hard things too. Like, do the proof of reserves, do the small loans, try to get it more accessible to more people, right? Like, I see a lot of people trying to say that, we can try to offer lower rates, and they're hiding their fees in different terms, in different parts of the terms and conditions. But again, if you look down at the actual offering itself, it's not really intended to further the Bitcoin ethos in the way a lot of times it's portrayed.
Yeah, absolutely. And I think it's pay attention to the fine print. And again, I think the clear differentiator, the breakdown is, again, proof of reserves, the transparency, right? The no monthly payments aspect of it. I think that, to me, is extremely important, right? Because as you mentioned earlier, again, like I said, guys, like I personally use this product, and I remember the first time I set up my loan, and I was like, you know, getting handheld by Mauricio, and like I was just like, all right, like dude, like how do I like put in my bank account or something? And you know, like, and it was just like, you know, it wasn't obvious to me, right? And it's so true, because that's the whole point, right? Like you want to, you need cash, right? And what would be the point of that if you have to give some of that cash away back monthly, right? So it kind of defeats the purpose. And again, this is a great tool, guys. I highly recommend it. It's a great way to, again, just not have to sell your Bitcoin. But I will caveat that with you have to be responsible. There was a great question up top, and I do want to address it. I'll let Mauricio answer it, but basically, BTC Believer says, if the price drops, do we have to put up more BTC as collateral, or do we have to pay it back or lose the BTC we already have with you?
Yeah, it's a great question. So BTC Believer, as you well point out, the Bitcoin that we take as collateral is the only security we have on the loan. So we have to make sure that at no point the collateral you pledge to us drops below in value relative to the dollars we lent to you. So as the price of Bitcoin drops, if your LTV, so your loan to value, starts at 50%, we lend you 50% of the value of the Bitcoin you pledged as collateral. So if you pledge $1,000, you'll get a $500 loan. As the value of that collateral drops, your loan to value ratio will increase. So it'll go from 50 to 60 to 70. When it reaches 70%, you'll start getting notifications that you need to add more Bitcoin or make a partial repayment to the loan. Either one of those actions reduces the loan to value. At LEDN, our hard and fast rule is if and when the loan gets to 80% LTV, our system automatically sells as much Bitcoin as is needed to close the loan and returns whatever delta is remaining to your Bitcoin transaction account. So it's very important for you to, and when you're taking out a LEDN loan, you will also see what your indicative liquidation price is. So it's very important as you're taking a LEDN loan that you never use your full amount of Bitcoin to collateralize that first loan, because you must assume that under some market conditions, you will be asked to send more Bitcoin to protect that loan. And we have many options to help you do that. You can proactively over collateralize that. A lot of our clients do. Just because the loan starts at 50% doesn't mean you can't send more Bitcoin. No, we're not going to stop you from doing that and drop your margin or your liquidation price. A lot of our clients do that. You can also have there's also an address for each loan where you can send more Bitcoin throughout the loan while it's open. So if you're going to bed and you feel like the market's rocky and you think something might happen overnight, you can also send extra Bitcoin to it just if you want to just be safe. And last, we have a feature called auto top up, which is unique to LEDN as well. And it lets you park extra Bitcoin in our transaction account, which is effectively a cold wallet address where the assets are held in BitGo. And you pre-authorize LEDN to move the Bitcoin on that account to your loan collateral address if and when it needs it. We've been in this business for 7 years. I've heard many stories about Bitcoiners going on cruises, on long hikes. They're not taking their hardware wallet. I'm going to be on an overnight flight. What happens if the market moves? So now you have the option to turn on auto top up if you need it. Importantly, the other important benefit at LEDN, which you should check with any other lender, I don't think most of them allow you to do this, but in the same way you can send more Bitcoin, and we ask you to send more Bitcoin as the price goes down, as the price of Bitcoin goes up and your loan becomes over collateralized, you can take that excess Bitcoin off. So when your LTV goes below 30, there's a button that lights up at LEDN and you can redeem Bitcoin to bring LTV back to 40%. So it's even Stevens, as we like to say. In the same way you need to send more on the way down, you can take off from the top on the way up. Again, things like auto top up, things like being able to redeem collateral, things like no monthly interest payments are all things that at LEDN are by default for free included into the fees that you're paying. In other lenders, they'll try to strip these things out and make them into like extra payment benefits just so that they are able to show you a lower interest rate and try to, in many cases, fool you or mislead you to think that your all-in cost is going to be much cheaper than working with us, which in fact is rarely the case.
Absolutely. And one of the things that made you guys survive, because the Bitcoin collateralized loan industry, when it first kind of popped on to the scene, right? And there's other players. I'm not going to name any names, right? Now would be appropriate to play the soundboard. I'm
Rocket ship, get on board.
I'm not going to name any names, but when they first kind of came onto the scene, a lot of them took shortcuts, and you guys did it the right way. You guys didn't release a token for whatever reason, and you guys did it the right way. And this is the reason that you guys are still around today. And this is the reason that you guys are market leaders, right? Because you guys, took it slow and steady. So before we wrap it up, there is a question in the chat from Knoxville. He says, is Tennessee not allowed to borrow from
Tennessee at the moment? The state that we're not, we don't lend into the state of Tennessee. We are working diligently to open up as many U.S. states as we can. We announced New York earlier this year. California lending license application went in earlier this year. So be patient with us. We're trying to unlock our services in as many states as we can, as fast as we can. But it's just a matter of prioritization and the demand we get from each state. I've heard loud and clear. We have a lot of people wanting us to get into Tennessee, so it is on our radar. We will keep you posted when we have any updates to share. And also, I've also seen a bunch of questions on the chat about, is LEDN eligible in my space, or is LEDN eligible in this particular country? There's a website where you can check. If you just Google, is LEDN available in my country, you'll get a link to our FAQs. You can input your country, and there's a drop down, and it tells you exactly which products are available in each country.
Amazing. All right, everybody. Well, if you guys enjoyed today's show, I do want to give a shout out to the live stream. 3,000 people watching live between YouTube and X, and 257 of you guys watching live on Rumble. Make sure to smash that like button if you guys enjoyed today's content. Wait, I totally forgot to say this. Go to learn.ledn.io/simply. If you don't use that link, I get in trouble. So go to use that link, and you get 0.25% off your first LEDN loan. If you don't use that link and you tell them that you came from Simply, Nico gets an email. So use the link. Anyways, if you guys enjoyed the show, smash the like button. Consider subscribing if you feel like we provided you value. I'm your host, Nico. It's my co-host, Opti, and of course, our special guest for today, co-founder of LEDN, Mauricio. Mauricio, thank you so much for joining us, brother.
Pleasure as always, guys.
All right, guys, we'll see you tomorrow for a brand new episode of Simply Bitcoin Live.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.